Hello and welcome back, everybody, to Fresh from the Trollbox, the BitMEX Trader podcast. Together with our CEO, Stephan Lutz, we're going to talk about the big halving event next week, and we're going to look at how Bitcoin is going to potentially react, as well as how it may tie into some of the ETF purchases upfront and thereafter. Stephan, thank you very much for taking the time with us today again. And as always, my first question, how was your week trading this week?
I have to say again, like on the one hand, totally expectable if you look at it with hindsight. At the same time, I feel some nervousness in the community and in trading, which is related to what we speak about today, right? And then on top of it, we had all the Web3 and crypto conferences in Hong Kong this week and last week, and next week there will be the Dubai conference and the week thereafter. So it is a busy time. Everyone's getting together, meeting up, and just trying to figure out what's going on in the rest during the rest of the year. And the biggest thing, as you say, Bitcoin halving, probably likely next week.
Very likely, to be honest, at this stage. Yeah, it looks like next Friday, maybe at the time of recording. Obviously, it may shift a little, but yeah, most likely somewhere in the end of next week. Yeah.
Yeah, and with that, let's have, from my point of view, a brief look at especially Bitcoin and Ethereum, just comparing the two. So we see the already known pattern, right? Just to reconfirm, yes, you see the support lines. We are
Bitcoin here.
nicely behaving within the range, right? It's always the same. It's some kind of a given. But from my point of view, and I don't know how you position yourself, but hopefully we might have a positive outbreak, right? Because we're coming from down again, approaching 77. What do we have here? 73, I think, is the upper support line.
Yeah.
And then we see what's going to happen. Ethereum at the same time, a little bit more boring, not really much, because there is no halving event. Update has been done, so that's all. That's all. The upgrade has been done. I think it's more like, yeah, it's going on, and there are no news at the moment on Ethereum and the network and activity. So it's Bitcoin, the halving, and the ETFs still, which I just keep on talking, and then you please jump in. For me, the thing about halving is all the crypto guys know what it is. It basically means that at a certain amount of Bitcoin in supply, the block rewards will be halved, right? So that means the supply that comes in from miners will be reduced. And at the same time, if all the miners would stay in the game, it would mean that the Bitcoin price on a CP basis would need to go up, because it's the same amount of energy, the same amount of work that goes into validating and into mining. At the same time, it's less Bitcoin that are mined. And this is why there is always this big uncertainty around it, right? It is easy thing. You reduce the supply. If it meets the same kind of demand, it's an upwards movement. But in the time before and after, it's not so much the day of halving from my point of view. The day of halving is actually a non-event if you're a rational player in the market. But it's you ask questions like, will all miners be still in the game? Who will drop out? What machines will they use? Do they need to invest? Have they invested already?
Yeah.
And then what is the demand side doing? So there is nervousness in the market because you can't answer all the questions. You can answer for yourself. If you're a miner, you can answer. And the funny thing, we just talked about that before the recording, miners sometimes don't hedge, right? You could say, we as trading professionals in a way, we would say, you know what? It's a non-event. I have Bitcoin on my balance sheet. I just go, I'll hedge them via a perp or via a dated future, for example, until June, July this year, and everything's fine. You just sit and wait. But many miners don't do that. They really just have the balances on their books. So they will sit in front of their screens and say, should I sell now? Should I sell later? Will I hodl even longer? Which is all determined by various factors. The factor number one is how much fiat do they have to pay for the energy, to pay for the machines. If they have done all of that and they have a buffer, they don't need to do anything. They can just wait. The ones that are short in that, they will need to do something. Then it's like, okay, what is my P&L going forward based on the new block rewards? What do I expect? Will hash rate go up, down, etc.? It's quite interesting. Actually, intellectually, it's quite interesting, right? I mean, and this, will then have a little bit of volatility around the halving, which you always have seen. This is basically the explanation for what's going on and why everyone has a different opinion on that.
Yeah, no, I mean, you raised a good point, right? Which is how much, say, financial engineering and sort of trading knowledge and hedging knowledge, etc., is with miners. And at least the experience from my side in the last couple of years is whenever you meet miners, say, at conferences, it's a very small amount that would say talks about how they use futures in order to secure their prices. Very different, say, from what traditional markets do. Examples, airline companies, right, where almost the hedging and finance department is running the half of the company because they try to hedge their fuel prices in such a long time. Whereas miners, I think, are still predominantly engineering firms and not necessarily financial service firms. Not all of them, but many. And hence, they are much more in the game of trying to improve the mining rigs, the mining hardware, the cooling systems, and try to kind of squeeze out additional revenues there, rather than trying to hedge their prices. And with that, then comes the fact that they end up selling in the spot market, which for the crypto industry itself is beneficial too, because without them kind of selling every day a little bit, there could be much harder price shocks, right?
Yeah.
But usually miner supply is a very constant daily, weekly supply into the market, which helps cover many of the new users that came to the market. Right? I mean, it's no secret that we keep growing, we keep seeing the number of wallets going up, we keep seeing the number of active crypto holders going up, and somebody needs to sell crypto to them. And many or most are interested in holding at least a portion of Bitcoin. Somebody needs to sell it. The ETFs don't. They've obviously eaten up a lot recently. And hence it's good to have that constant supply in. So and yeah, keep in mind that they are predominantly tech and
Which,
engineering firms to
yeah,
date.
which is a good point. Just focusing, at least that's what I'm doing right now in terms of curiosity on what's going on in the market. So coming back to ETFs, actually ETFs now is, as you said, it's plateauing. They have their basically assets under management. It's pretty stable. Yeah, there is a little bit going in and out. It's nice to watch, but it's not market making, so to say. So it's not making the market. The funny thing, and we briefly spoke about that last time, and I have been asked by a couple of people, so not many, but just to explain what we meant. So with the ETFs, the funny thing is you can trade now, you can do a basis trade on CME without touching fiat at all, without touching crypto at all. So crypto natives go to exchanges like BitMEX and others to directly trade short
The
per
base trade.
Bitcoin.
Yeah.
Right. But if you don't want to touch crypto because you're a TradFi firm or you just don't want to broaden your technological exposure to crypto, you now buy a Bitcoin ETF, you deposit that with your prime broker. Your prime broker gives you leverage loan on that to trade on CME. You trade the basis trade. So there are two things I'm looking at is what is the open interest on CME right now to get an indication whether we have a reduction of those amounts or not, and whether there will be sell pressure from ETFs so that they need to basically unwind what they have in positions. And the second one for me is it's an old one. Actually, it's not something new, but I start looking at stablecoin market cap again, because that's actually the gate in and out of the crypto market, right? Even the ETFs, it's speculation. I'm not working at one of them, but I expect that they don't go like, okay, here are 100 million of US dollars. I just deposit that on a Coinbase or a Kraken exchange account, and then I do the conversion. I assume they rather go via switch to Tether or Circle first, and then do it in the crypto ecosystem. So if you look at for example, Tether or Circle market
Supplies.
caps, total
Yeah.
supply, you see actually whether you have a net in or outflow of the crypto ecosystem, and that's quite interesting, right? Yeah. You bring up
We can look at it here.
yeah.
Exactly. The red line is the aggregate supply over the last 2 years, and we can see a little bit of a downslide over the last couple of years from, I think, somewhere in the 140 billion now down to somewhere in the 120 20 billion.
Yep.
And now we can see it growing since, I think, somewhere in October.
September, October. Yeah.
September, October last year. We can see it growing again, and we can actually see that in the last couple of weeks, the curve starts to kind of pick up a little. So there's potential a bit higher demand coming. I mean, here in the aggregated percentage change, we can see the increasing curve a bit better, right? Clearly, stablecoin supply is going, demand, frankly, and hence minting is going up.
And that then spurs the industry, which, I mean, it's logical for, I mean, it's in a way trivial. At the same time, I have to admit, I haven't looked at that number for, I mean, not a long time, but not really vividly. I was more looking for what's the news, what's macroeconomics, etc. And then you see, hey, it's a pretty stable relationship. So it's quite interesting what's going on there.
Yeah, and you also mentioned the future open interest on the CME. They're relatively stable, right? The blue line here, we can see it was a little peak in late March, but it's a relatively stable line, somewhere in the 28,000 Bitcoin open interest. And I think we have currently roughly 16,000 Bitcoin in the ETFs. So possibly, right, that a fair share is part of the base trade that you just mentioned. Now, the price impact of this should be relatively close to zero, to be honest, because obviously any unwound future would lead to a sell in spot market, etc. Right? So nothing too concerning. Yeah, interesting. I guess what it all comes down to then is the news of the halving and sort of the news of the ETF approval. Is it going to change anything for new users? So do we actually think that there is other effects of the halving of the ETF that can drive the industry in the second half of the year? Or do you reckon it won't be so much the, say, technical news for crypto, and it will be much more a second half of the year based on macroeconomic factors, the elections, etc.? So kind of looking beyond the halving, what do you reckon is going to drive the price of Bitcoin in May and onwards, if we want to talk about that briefly?
Personally, I look rather at the macro scenarios and not so much at the halving, although I'm cognizant of the fact that the halving itself can be an accelerator. If it goes positive, so if people, let's say, wake up again and we see it, okay, there is the election results are in a way that you want to hold more crypto rather than fiat. If interest rates will fall, I mean, that's priced in already. And we actually had the pivoting in news that it's less than expected, but maybe it gets more than so the interest rate drops might be bigger, then something happens. And then all of a sudden people will recognize, the new ones that come into the system will recognize, wait a moment, yeah, Bitcoin really is an inflationary asset. We just had the reduction in supply. So with that, it might accelerate any positive impact. So for me, the halving itself, not something that's changing anything, because, well, if you look at it, you know it's expected and it's clear, it's programmed. This is a feature of Bitcoin. But the moment people start to realize why they should invest in Bitcoin, it accelerates their willingness to do so. So it's, I mean, for me, like optimistic outlook rather for Q3. Yeah.
Yep. Okay. Sounds like a very high note to end on. So next week, halving, you reckon priced in, no event. I would say a little bit of caution, just because there could be people that think, let's sell the news. Even though, as you say, it's no news, but you always have it. It's a little bit like the ETF approval. Everybody knew it would come, but then it came, and suddenly we had a sell the news event, and thereafter a strong demand. So traders, be careful, especially leverage traders, be careful. Some might want to put some low ball long orders in just in case. And in order to know what the market is really going to do, we have obviously our magic dice. I'm going to roll it, and we'll see what the cube says. Cube is very bullish.
no
Cube says 100x.
Do your own research.
That is a very fitting Easter egg. I would say watch the space, guys. We might have a little special halving surprise on the 100x note. So wait for it, and watch our Twitter. With that, Stephan, you're going to be in Dubai next week.
Yes.
Anybody that would like to meet you there, reach out via LinkedIn, Twitter, Telegram to us and or to you directly.
Yep.
And then I wish you good fun there.
Thank you very much, and see you next week.
Bye.